Welcome to another episode of Time, Talent, Treasure Radio from Taatjes Financial Group. Taatjes Financial is a company that specializes in helping retirees and pre-retirees build purposeful retirement plans. Custom plans that not only help clients steward their treasure, but their time and talent as well. They believe that if you're taken care of financially, you go even further to make the family, community, and kingdom impact you truly desire to make, which is the ultimate purpose of wealth. If you'd like to set up a no-cost, no-obligation meeting with one of their financial advisors, give them a call at 222-4236. You can request a meeting at taatjesfinancial.com or simply stop by their office on 19th Avenue Southwest in Wilmer. All right, folks, we're back. Thank you so much for tuning in to Time, Talent, Treasure Radio. Jared Sebestier joining you once again. Been talking a lot about estate planning, the psychology of money, the psychology of investing, and we're going to talk a little bit more about RMDs and QCDs. Ben Taatjes joins me on the show now, and you guys just had a really cool webinar today, including two of your advisors. Let's talk about that today.
Yeah, Jared, I mean, we talk about these acronyms, right, all the time with clients. And every once in a while, somebody says, whoa, slow down. What does that stand for? RMDs, QCDs. And I had two of our top advisors, Claire Molden, who's a certified financial planner, and Kendra Peterson, who is a chartered retirement planning counselor, or CRPC. These two women gave a great seminar. The title of it was The ABCs of RMDs and QCDs. And I love the name of it, but basically it was the essentials of required minimum distributions and qualified charitable distributions. They named it, and I thought it was such a great name for that for that webinar, because so many times, like I said, we have clients that are like, just slow down. What do these things stand for? What 100%. Do they mean?
Yeah, well, I think that's a good place to start. Let's break that down and just describe what these are and more about what these ladies talked about.
Yeah, so the first one, I think we've heard about this one longer, is the RMD, or required minimum distribution. Sometimes, just to confuse people more, our industry does a good job of that. They call it the MRD, or minimum required distribution, as if there's not enough confusion already. But every time that a client in the past turned 70 and a half, they would have to start taking money out of their IRA, right? And now that age requirements actually moved out to 73. So the ages have changed on which time you have to start taking money out of your IRA. A lot of clients don't understand that part. I mean, we talk about putting money away, and you get a tax deduction for doing that, and you get some tax deferral over the years from putting money into that IRA. Well, at some point, it has to be taxed. I've often said to some of our clients, don't forget that IRA is really a joint account with the IRS. Right. And they look at me funny. I'm like, I don't have a joint account with the IRS. Well, you kind of do. In this case, they have a claim on a portion of that, depending on your tax bracket when you pull that money out. Yeah.
Interesting facts that people need to know and probably don't think about as they consider their income plan and how they're going to develop this plan throughout their retirement.
Yeah, and I think people are like, well, why? Why do I have to take money out? Well, number one, it's because the IRS said so. Yeah. But they're like, well, why? Why did they say so? Well, what the IRS doesn't want is that wealthy families or anybody now can keep this money growing in this tax-deferred mode for generations and generations, right? They want you to pay tax on it. So there are rules that say when you hit that certain age, and again, they're going to continue to change that age, so it's important that you talk with your financial professional. But as you get to a certain age of life, there's a calculation done. It's based on the 1231 value of that account the prior year, based on a factor. And that amount gives you what's called your required minimum distribution that must come out of the account so that they can tax you on it.
Yeah, that makes a lot of sense to me, and it probably makes a lot of sense to you folks listening. What about QCDs? What's kind of the gist on that?
Yeah, so QCDs, we've been doing this for years with our clients, Jared, where they turn 70 and a half, which used to be your RMD age. Now they have kept that age for a QCD. QCD stands for Qualified Charitable Distribution. Okay, and that was made permanent law a few years ago, where If you decide that you don't need all of your required minimum distribution, or RMD, you can actually send some of that money, or up to $100,000 of that account, and we've actually done it to that level with some of our clients, but up to $100,000 to charity. And it has to be to an actual charity, not a donor-advised fund, but that charity then they don't pay tax, right? So being a tax-free entity, tax-free nonprofit, you can take that money, send it directly to them, and never pay tax on that IRA distribution.
These are just two things that kind of encompass an entire plan that people need to understand. They need to know the strategies involved. Talk about how these may just kind of interweave briefly into a retirement plan.
Well, they interweave in that. What we like to do is get what's the goal, right? We're always talking about, you've got this pot of money that you're stewarding. You've got these assets that you are stewarding, and what are your end goals for them? Many times of clients that won't need all of their income, they won't need all of these assets. Well, they're able to then donate some of that income directly to a charity so they don't pay tax. But it all really starts, Jared, with, we've talked about this on past shows, 3 questions that we're asking every client. First of all, we're going to try to dig down into what is your overall asset allocation. Well, we like the question basically is, what are you stewarding today? That includes land, that includes business assets, retirement accounts, everything. What are you stewarding? Second question we'll ask them is, what do you need now and in the future to live on? So essentially, what is your income plan? With that, of course, that's where that RMD discussion and QCDs comes in the most. Right. But what do you need on a regular, consistent basis to cover your daily needs? I love the concept of budgets for people while they're saving. And you and I both are Dave Ramsey people. We talk about budgeting all the time. Yep. Let's budget so that you can save money. Well, I love an income plan, a good income plan, because that's really a budget for retirees, so they spend their money, give their money, and that's really what we're doing there with that second question. Then, of course, our third question, which is, I think a phenomenal final question to any retirement plan, is if you know what you have, you know what you need of that for your living, there's going to be something left over. What do you do with what's left over, and when? Right? So almost every good stewardship plan follow those 3 questions, and that last one really keys in on, and we've talked about that in past shows, how do I prepare the next steward? So when we talk in RMDs and QCDs, they come into most financial plans, Jared, because it's such a big part of many retirees today is their IRA. They leave their job and they've got a 401k and they're uncertain on what they should do with it. How do I best pull this money in and use it the most tax efficient way? Well, the RMD and the QCD are 2 key acronyms that really you have to understand if we're going to help clients steward those assets the best.
All right, Ben, we appreciate that so much. If you want to watch the replay of today's webinar, the ABCs of RMDs and QCDs, just visit Taatjes Financial's website at taatjesfinancial.com or visit their YouTube channel, search Taatjes Financial Group. And if you want to get this conversation going about your retirement plan, RMDs and QCDs, give them a call right now at 222-4236. You can request a meeting online at taatjesfinancial.com. And if you're in the neighborhood, please feel free to stop by their office. They are located on 19th Avenue Southwest in Wilmer. I'm Jared Sebesta, joining you on another episode of Time, Talent, Treasure Radio. Thanks for listening. We'll see you next time.
Securities offered through Avantax Investment Services. Member FINRA SIPC. Investment advisory services offered through Avantax Advisory Services. Insurance services offered through an Avantax affiliated insurance agency.